How's it going today? Today we're going to talk about Tesla. Is it overvalued? What's my thoughts and opinions on Tesla? Today it's Wednesday. I'm going to try to upload this video. Hopefully I can get it out soon. Whenever. I've been trying to upload, but it takes forever on my phone to upload them. So hopefully I get this uploaded on the weekend. Sometimes it glitches out and doesn't upload them properly. But anyway, hopefully I can get it out there. I mean, this stock has ran up a lot. I'm going to talk about it and break it down and hopefully put it into context and perspectives and everything like that. Is it a good buy? I get a lot of questions. A lot of people go on about the stock. I'm going to give you my inputs about it and what I've looked at it and seen and did some research and some valuations on it, or try to evaluate it the best way I can. Anyway, we're going to jump right into it. Make sure you like and subscribe the video for more updates and everything. I could do this. So maybe I thought about just making one talk about stock of the month or stock of the week and just talk about that one stock. Maybe I could do that. I could start off with Tesla. But anyway, let's just jump right into it. What Tesla is, what's the value of it, what I think is fair value, what I would pay for it, is it overvalued, and everything like that, and put it in context to everything else. Now, here's we have to talk about, if we talk about any valuation, always have to look at the market cap and what that really is. It's basically how much this company is actually valued on the public market. So basically you take all the shares and times it by the stock price, and it'll give you a market cap, and that's just how it works. So essentially you do that, market cap sitting around about 300 billion. So this is a $300 billion company. So Tesla's one of the biggest companies, I think, I think it's the biggest company that's not in the S&P that's public. It's kind of weird because the only reason it's not in the S&P 500 has to have profitability. It hasn't got there yet. I think eventually will, hopefully. Well, it has to. Anyway, with the market cap being that high, actually, it's kind of weird. With the valuations, there's really no good way to evaluate it because it doesn't really have free cash flow at the moment. That's consistent enough to evaluate it and extend it out. Because actually, if you extend it out the rate you're doing it, it could be around actually only a $20 billion company. So actually, on a discounted cash flow kind of valuation, you'd basically take the revenue and then you kind of add how much percentage of revenue is the company kind of worth. So it could be sitting around about $20 billion company. I mean, 20 billion. So honestly, that's, as you can see, it's way overvalued. Doing that metric, if you do book value, which you don't really do car companies as book value, it's even more extreme because then it's like maybe 10 billion. So, I mean, we really don't use book value valuations. That's more really for financials, banks, and securities and stuff like that, and insurance and stuff like that. But yeah, then we do the operating income. Basically, which I like this one probably the most, evaluate technology companies. Well, I hate to call them technology. What isn't technology anymore? But you basically take the operating income and times it by the market cap. And if you do that, it's even more. I mean, it's trading about 550 times operating things. I mean, that is extreme. That is very, very high. That is, I like that metric a little bit better than, and put it on perspective, Google is sitting around, I think last time I did it was around 20. I mean, it's probably went up a little bit, so maybe 21, 20. But so majority of them, they could trade and that's why I kind of like it. It kind of focuses on operating income versus earnings, which earnings and operating income is a little different. It's kind of actually the income the operation of the business actually makes and everything like that. It's a little bit easier, and it kind of tells you the whole story a little bit better. But it's kind of weird, the operating income for that. So it's really overvalued, I should say, in quotations. I mean, what is valuation, you know what I mean? And then we're going to get into the next one, kind of like, is it worth it, you know what I mean? And it's always like, why do you have to buy a stock? What is the potential of it? So, and the more overvalued it kind of gets, the more risk you take. Basically, that's what I'm going to say with that. So the higher this stock goes up, the more expectations are built into it, the more everything is basically, it's all in. It better work or it's going to go bust. And that's basically what Tesla is. Now, what is the total potential that Tesla could bring? You know, I mean, let's say it gets as big as Amazon or something like that. That's $1 trillion. Okay, let's say it gets $1 trillion market cap. it has revenue in the hundreds of billions, and has free cash flow in the 20, 30 some odd billion. You know, it's just 10 billion in profits, and it's basically 20 billion in profit. Can Tesla get there? I don't really know. I mean, but that is, let's say it gets that. That's only really actually only 3 times more than what it's at now. So, I mean, you're only betting that even, let's say the best possible answer is it gets bigger than Amazon and Google and all that, which I doubt it. I gotta explain why I don't think so. Maybe eventually, but, I mean, maybe in 30 years from now, maybe, but that's only 3 times from where it's at now. So really, as you can see, you know, I mean, you go 3 times from that, I mean, it's a little over 300 billion. So 3 times that, you're sitting around a trillion or so, give or take, maybe, you know, 3.2 times more. So really, but there's so much risk. Like I said, you know, the worst case scenario is it goes to zero, but the most logical, what I call the logical risk, kind of like it is, I mean, it can go all the way back to where it's this kind of cash flow kind of valuation is, because that's kind of like how these investment bankers and a lot of these people kind of evaluate these companies, on a discounted cash flow kind of valuation, and that's sitting around 20 billion. So if this thing goes bust, this thing can go down 90%. You could basically lose everything. So eventually you're risking, basically, let's say you have $1,000, make it easy, that you have a risk of going $1,000 to all the way to 10 to 100 versus it going to 3,000. So essentially there's a lot of risk in this company, and really not a big upside, really. I mean, it's not like now if it was sitting around 60 billion, you know, or 60 billion, maybe, let's say, like I said, it's 20 billion on free cash flow, 20, 30 billion realistically on cash flow valuations. You know, so basically you can lose half your money, but it can go up. Let's say you think it's going to be $1 trillion, then it can go up 20 times. So, I mean, that's a pretty good risk. You can have $1,000, it goes up 20 times. That's 1,000 to 20,000 versus 1,000 to 500. I mean, that's pretty good risk. You can make 20 grand on it and only lose maybe what? $500. I mean, that's pretty good risk. You know, I mean, that's what I'm talking about when I talk about risk management. And now we're going to bump into what the car company does. And really, I mean, I'm not going to get into the batteries. A lot of people say that's where it's going to be, but I don't really see that. But anyway, let's get right into the numbers and compare it to this and everything like that. I hopefully the video won't get too long, but anyway, we're going to get right into the numbers. Tesla only sold 367 billion, and put that in perspective, Toyota, so Ford is actually, Tesla's worth 10 times more than Ford. Ford sold 6 million and some change, you know. I mean, so essentially, and the other thing that this car company is doing is it's coming across as a luxury brand, but you know what I mean? It's kind of one of these things, I don't think people understand what luxury brands really do. And in the car market, a lot of people that go spend a lot of money on cars, they go buy the BMWs and the Mercedes-Benz and everything like that. The reason they buy them because the average person can't afford them. You know what I mean? So if you try the Mercedes-Benz, let's say a BMW made a cheap model, it probably could hurt their luxury brand. So I mean, that's the problem with these hybrids, and that's why there's really none. And you look at all the history of it, there's really no mid-luxury, low-end luxury. Because what is luxury? You know, when you buy the brand, let's say if Tesla's going off the high end, you have two markets. Basically, you have the high-end market, car market, and the low-end market. Which basically the low-end, which I mean by low-end, is kind of how much it costs. A Ford car will cost you around $20,000, $23,000, you know, and it's a pretty good car. You know, Toyota, around the same amount. You know, Chevy and Dodge, and that's kind of your economy car. So the average person will buy those cars. But Tesla is sitting about, the base model is sitting around $40,000. That's, in my opinion, that's a little more than the average person can afford. You know, the average person can't really afford $40,000 in a car. You know, that might be cool when you're young and don't have any kids, but once you have kids and expenses, unless you're making 6 figures, which, you know, the average person doesn't make that. They make about $30,000 to $40,000. So, I mean, that's a $600, $700 thing. So think about the largest companies in our thing that have the biggest sales. There's something that everybody needs. You know what I mean? It's something that everybody needs, you know, that everybody can afford too. Because everybody needs cars, but not everybody has a Lamborghini because you can't afford it. The average person can't. And Lamborghini would never make a $20,000 car. Why? Because it would hurt their luxury brand. So, You know why? Because who the hell wants to, if you buy a Lamborghini, it's really for status, for power. It's because maybe, somebody else doesn't have it and I have the coolest car on the thing and nobody can buy it, So I have it's kind of like a whatever, that's kind of like how it is. I'm not saying all of them, but bottom line, that's kind of what it is. So, that's kind of a steep thing. So if they keep lowering it, it'll have to lower all that. Then you're competing with Ford. And a lot of times, people say, Ford's try to do these electric cars and they fail. Well, that just says that their market that's buying those economy cars don't care about electric cars. They don't care about them. So that's basically what that says. Ford always makes these ones and Toyota and all this, and they say, they can't keep up with Tesla. No, what it means is Toyota, Honda, they can make one probably, but nobody wants it. Nobody wants it. Nobody wants to spend. The average consumer doesn't want it. You could say, the consumer going to change. Maybe, I guess, maybe so, but you know what I mean? And the way it is, would I ever buy an electric car? Maybe. There's a lot of stipulations with it. It's so much easier just to buy one with gas and just go put gas in it. You know what I mean? Unless you want the government, but then you're relying on the government to change laws and put in regulations. So I believe, and actually, that's why I really don't I think Tesla has a lot of risk involved with it. And it's doing something, and it's cool car and everything like that, but I think it's overvalued to the point where it's gone to the point of a bubble. And normally, every single time a bubble normally bursts, and it's kind of almost time for a top. Almost, I think the stock hit 1,700. That's what it's trading at right now. So I believe the stock could take a hammered beating. Maybe in this earnings season coming up, we just had some bank earnings come out which was okay, but they're kind of, holding back on their lending, you know what I mean? And how do you want to buy a $40,000 car with no loan, So, it's just kind of how the economy is. I know you have to think longer term, but, that's kind of where this is heading to, So I believe actually the stocks that I believe, if you want to play the car market and the changing car market, is I believe AutoZone and Uber. I think people are getting out of cars, actually. I think that's where the real trends are at. It's people are going, hey, I don't really need these, but I don't really believe that they really need these cars and stuff like that. So I believe that's where the consumer is really going. I think that is the changing in these cars. And I've said it a lot of times because people just can't afford it anymore. You think about the average person, you look, and it's funny, you want to look at the trends of cars and how expensive they are. Look at the 1960s and how much people made versus how much it was. So essentially, if you think about that, just think about that trend, that solely cars are getting out of price for the average person. I think eventually, but everybody needs transportation, and everybody needs transportation, but they don't need a car. You have to buy a $40,000 car. You know what I mean? I believe it's pricing the average person out. Maybe they can keep jacking prices up, and that's just the way it is. But, that's kind of my thought on Tesla. I think it's kind of getting to the point of overvalued. If I was to the point, I think almost maybe right now would be a good time to profit from it and take some profit, take some money off the table, unless you think that the thing is going to go to $1 trillion company, which I just don't see that. I think the valuations have just gotten crazy. And the other thing, what I've noticed is at the sign of a top, or close to the top, or close to euphoric, is when these investment bankers, they start bringing these car companies out that have electric potential. Because they see Tesla, oh man, look at all the money, you know what I mean? And they always come out the same time, look at the pot stocks. These investment bankers, they're smart. They know the market. They know what the market needs, the stock market needs, and investors want. So they got all these pot stocks. And all these pot stocks came to public all around the same time. They were like, oh man, these things are going to be big. Look at the big opportunity. And now look at them, all crashed. And now look at that one company, I forget, Nikia. They made this electric semi, and they brought it public, and that thing just shot up a lot, so they kind of set those things, and it's kind of weird how it all kind of works with the underlining of investment banking. But, that's kind of how it is to get people to buy it, and the investment bankers make all the money, and they dump it on everybody else, and that's what happened in the dot-com bubble. They just kept bringing these companies public. Like, we don't even have revenues. Hell, if it just bring it public, somebody could buy it, and it's kind of like that it is. It's not that extreme, but it's kind of getting there, where these companies just keep bringing every company public. But anyway, that's all I gotta say with Tesla. I can go on and on and on why I really don't really like it, and I think it's kind of ahead of itself. I think it's a great company, though, but I think, you have to have a good company for a great price. You know what I mean? The both has to kind of align. You can't really have a great company, but the price ain't there. The price ain't there. You know what I mean? You wouldn't pay you know what I mean? Gold might be good, but would you pay $1 million per ounce? Probably not. I mean, if the price ain't there, it'd be almost like taking gold, you know, and buying, you know, if it's at, was it 1,800 and paying 100 times more than that, paying 18,000, you know, it might be worth something more. But I mean, it's just the way it kind of is with it. You know what I mean? You have to get a decent price for it. You know what I mean? Like I said, if it maybe got down to 600, I think maybe a good buying opportunity there. If you're really into it. And the other thing with car companies is it's a high capital expenditure business, so the margins are pretty narrow. They go in and out of the economy. The economy's doing well, they go do well, but if the economy does bad, they could do bad too. Because if people lose their job, they're not buying cars. Well, anyway, that's all I gotta say. Leave a comment if you like the stock or you like it or anything like that, and I can keep it posted. Maybe I can make more videos evaluating these companies and giving you my honest opinion when I break it down a little bit more. Hopefully I broke it down enough for you guys and everything like that. Maybe I'll make a part 2 if you guys really like it. But anyway, make sure you like and subscribe and leave a comment of maybe some companies you want me to go like deep dive or whatever into them. And maybe I could try to pick one a month or whatever. Anyway, thank you for watching, and thank you.